Hey, you guys, good morning. I pray that you all are doing well. So, for my morning analysis, I am going to be showing you guys what I'm looking at as far as the Japanese yen pairs are going because y'all, they've had like some really good, decent explosion moves to the upside. And so, I want to show you guys like how when you're trading multiple currency pairs, how to weed out currency pairs that you want to get into, how to know if some pairs will fit your rules for you to get into, and how to set your orders to get into them. Okay, so let's start with first CAD yen. So CAD JPY, as you guys can see, let's start here on the daily time frame. Price has just been going up, 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 up. This is called high volatility. High volatility is when price just has like big increase in momentum to the upside or big decrease momentum to the downside, and it's like no stopping it, right? So whenever you hear someone mention volatility, that is what that means, or high volatility, that is what that means. If we come over here on the 4 hour time frame, we get to see how these daily candles are broken down on the 4 hour time frame. Okay, so what we're now doing is pairing two time frames together that gives the same information but kind of fits like a glove. It fits hand in hand, right? Like I have small hands. I don't want to put my small hands into a large size glove. It just won't fit. But if I get, let's say, like a medium glove or a glove that fits like a small, then it's going to fit. I still have a little bit of room if I use a medium, and that way there's not too much of a distance or range with from my hand with the glove, right? It's kind of proportion. That's kind of the same thing with trading. You want to make sure you're on decent time frames to where you can see price move on a higher time frame but still be able to catch trades on a lower time frame below it. You don't want to go from a daily all the way to a 1 minute time frame, right? Now it does depend on if you're a day trader or a scalper, but for me as a swing trader, I want to go from the daily time frame to the 4 hour time frame because I feel like they're proportioned to one another, where there's enough range for price to move and pull back. And if not, that's still okay. But it still fits what I'm looking for. So, for example, I was hoping that yesterday price could kind of pull back to give me a good setup so that I could actually trade. I had a pending order set here on top of my estimation zone because, as you guys can see, the last high was at 97.77, and then the last higher low was at 96.73. I wanted to see if price can come back down to my estimation zone around $97.40, but she just has kept going up. So as far as what am I looking for my next move, I want to see if price can give us a pull back, still back down to that range, down to that zone. Now, I'm not going to set a pending order just yet. I'm probably going to come back around 5 o'clock to see if we start to get a decent pullback. And if we get a pullback, I'll set a pending order, a pending buy limit. So let me talk about what a buy limit is. A buy limit is basically you creating in order for the market to trigger you into the trade automatically without you triggering yourself into the trade, which is a market order or a manual order. It just basically means that if price touches my zone, instead of me waiting to see what that candlestick is going to be, once price reaches, let's say the top of my estimation zone here at like $97 and or 97 yen and 39 cents, it's going to put me in the trade automatically, right? So that's what I'm going to be looking to do once I see price pull back. So this means that I don't have a trade this morning on CAD JPY. We go to the next setup because I'm looking for something that's pulling back or close to that zone. Okay. Next is going to be Euro Yen. So I have my one of my recent setups here that I was hoping could come to fruition, but it did not. Let's talk about that as well. Okay, so um price down here had a higher high at 133.90s, then it had a higher low at 132.33, and then a higher high at 134.75. I do not set my zones at higher highs. Like I know some people can say, well, looking at it, you could have set your zone at a higher high. That's not the way I trade. Because if I did that for most of my trades, they would not be profitable. I look for deeper pullbacks, okay? So I was hoping that price could have a deeper pullback to stay above 133 I'm sorry, 132.33. But as you guys can see, it did not pull back deep enough. And so this trade basically invalidated itself. And the way that it invalidated itself, and I'm going to update my chart with you guys now, is that it made a new higher high, right? And so since we have that new higher high, this lowest wick to this candlestick becomes my new higher low, and I'm going to set my estimation zone above 133.72. And now, as you guys can see, I am going to wait for price to pull back to this zone. So once again, I need to see evidence that price can pull back, because at this moment, I do not have a trade. Now, what I also see on the daily time frame, depending on how this candle closes, is that this bearish candlestick in the middle could be what's called an inside bar. And I normally set my zones on top of inside bars in an uptrend, or on the bottom in downtrends. And so what could happen is that I could have, and let me get this to show on the other side. There we go. So what could happen is that now that I have two zones within the same area, this is called confluence. So price, if it can pull back, and I'm probably going to set my zone on my depending on how price closes today, because I'm going to come back at 5 o'clock p.m. Depending on how price pulls back today will determine how I set my next order. But as far as I'm concerned, I am bullish on CAD JPY. I'm bullish on Euro Yen. They just have not given me my entry, but once they or my confirmation to set the pending order. But once they do, I'm gonna want to get into the trades. Okay, because here's the thing: the reason why I'm saying pullbacks is because I'm a supply and demand trader. I cannot buy high. I don't also sell high. So I need price to pull back, because once price pulls back, that's how I get my take profit. Once price pulls back, that's how I know that I have another trade around the corner, but I just can't just enter the trade right now. Okay. So that's why pullbacks are very important, because they give you your take profits. They help you stay out of trades that you should not be in. Okay. They help you validate your position. So if you've been struggling with that, if you feel like you've been entering trades too early or too late, it could be because you're not waiting for price to pull back. And pullbacks, the deeper the pullback, the more money you're going to make when price moves in this natural direction. For example, this is an uptrend. So the deeper this thing can pull back, the more money I'm going to make if it continues up. So I want you guys to think about that, okay? So let's talk about pound JPY, because I actually just took profit on a trade yesterday. Or, yeah, yesterday going into the morning. So this was my last position that I took. I got into the trade the 24th, which was 4 days ago. It was a pending order as well, a buy limit. And so let me walk you guys through the setup. Okay, so price had a higher high at 161.092, a higher low at 159.053, and then price came and it made a new higher high here. Now this is also coming off of a 533 pip win. Okay, and if you haven't watched that video, I'll link it now below this video. Okay. Should be one of my previous videos, but I'll link it below or in a card somewhere above this video while you guys are watching it. So um right now, or last week, when I saw that price made a higher high, I wanted to see if price could stay above 159.053. I put my estimation zone where I wanted to see the buyers come back into the market. And I placed a buy limit around here at, let me get the exact 160.307. Okay. So when I put in the buy limit just basically says trigger me into the trade automatically if you touch this exchange rate. Okay. But price has to be above it. So when price was above it, I saw this bearish candlestick. That is when I put in this pending order. Now, at this time, or the next candlestick came up at 1 o'clock in the morning, I'm already triggering to the trade. I had a little bit of drawdown. So that was fine. This is why we use stop losses, right? This is why we set our stops into a place where we kind of don't want to see price reach. Stop losses are very personal. Everyone uses them differently. I just changed how I use my stop loss due to one of my students, and I thought it was just very smart how she does hers. And so anyway, I set my order to the negative 27 on my Fibonacci. And as you guys can see, I have no Fibonacci levels in the middle. I don't use them anymore. I just use one fib or one fib level, and that is just for my take profit on my second trades or my optional second position. But I could only take one position because if I would have set the order to my high, as you guys can see, my risk to reward would have been 0.96. I can't take that. I'd be gambling at that point. But setting it up to the negative 27, my risk to reward is at 1.48. I can take that because it's above a one. I don't try to get caught up into like one to twos and one to threes. It's just whatever the market's going to give me as long as it's above a one. So what I'm waiting for now is, now that we have a new higher low, only because we got this new higher high, I want to see if price will come back to my estimation zone. And we may have another inside bar that may sit here depending on how this candle closes. Okay. Depending on how this candle closes. And this just happens to hit the higher high, right? I'm not basing this on the daily time, on the 4 hour time frame. This red zone is always based on for this particular one with the inside bar, it is based on the daily time frame. Coincidence, right? But I want to see if price can have a deeper pullback, but the daily does have priority. So depending on how price pulls back, I'm going to come back and set my pending order and then buy back up to the high. AUDJPY really quick. Same scenario. Okay. So I haven't taken a trade on this one in a while. Either last position to potentially take this trade was the 14th of March. And you guys can see that now she's been in a rampage to the upside as well. And so let's set our zones here. Okay. So I want to see if price can stay above 91 yen. And if she can give us that same pullback trade back to the upside. And then USDJPY. I was hoping she could come back into my zone here as well. As you guys can see, she almost reached it. She almost reached my zone. But it was no bueno. She didn't reach it. So now I just got to update this price chart. And as you guys can see, I trade to the right. I don't really look to the all the way to the left like most people do, because for me as a supply and demand trader, I'm focused on what's happening right now, not what's happened 4 or 5 weeks ago. Unless it's like the weekly time frame, not what's happened months ago, unless on a monthly time frame. But I just want to focus on the here and the now, the recent buyers and the recent sellers, and where price can go to for my next leg. And if this is something that you've been struggling with, this is something that I do teach in my community, because one thing about this here is it's not hard to learn. You just need motivation through it, and to see it through, and to untrain and unlearn some things. Like if you've been struggling with support and resistance, it hasn't worked for you. If you've been struggling with trend lines and it has not worked for you, or indicators, it has not worked for you. Not to say starting over can help, but literally just starting at trend can help first. Now that's one of the first things I do with people. Let's start with trend, and let's break down these price action candlesticks, because not every candlestick matters. Like I don't really care for the middles. I'm really caring for the highs and the lows. And so when I, teach you, it's like, hey, let's just separate what you know. Let's not focus on all candlesticks. Let's just focus on 2 time frames at a time. And let's focus on getting the 4 candlesticks into play. Like I only teach 4 candlesticks. And then I sit and I say, hey, let's focus on how you can read the trend, how you can buy with the buyers, and then how you can sell with the sellers. And don't counter unless you really need to, but that's based on another higher time frame. And then how can you trade in the different market conditions? There are 4. And there's only one condition you don't trade in, which is just consolidation, unless you're that type of trader. But I don't teach that either. I don't want to teach anything that's confusing. I like everything to be simple and straightforward. So when you make your money, you know why you've made it. But when you lose your money, you know why you lost it. And that's the most important part, because it helps with your profitability at the end of the day. Because if you want to like pass FTMO challenges or whatever prop firm you go with, or if you want to trade your own money, you need to know how you're making it, how you're losing it, and a good percentage to risk per trade. And these are things that we go over, and when to have multiple entries, like 2 entries at a time, when to have one, when to stack your positions, when to hold your positions. So these are things that's important. And even creating watch lists, how to focus on what to trade. Because you don't have to have an extensive watch list like this. If you can keep up with it, fine. If you can't, that's fine too. But we're putting all these things together so it's a simple infrastructure for you to be able to trade profitably. Okay, so if that's something you're interested in, click the link below. Other than that, you guys have a great trading day. I'll talk to you guys in the next video.